All right, so this is just going to be a quick little market scan. Um, Continued, conviction and thought process behind what we're doing within the equity market as a whole, and what I think happens and why my short side focus is still completely valid into quarter four and into next year, right? So, my whole thing is just understand the horizon, the time horizon of your position. Understand the time horizon of your thesis, of your conviction, and understand when you're wrong, right? And I have yet to see anything that kind of sways me the other direction within my thought process and thesis on the broader equity market. Um, I more or less continue to see added conviction that really makes my thesis stronger, personally, in my opinion, right? So my whole thing is I think that we're topping out, right? I've said that for a while, and I know I was a little bit early. Um, I wasn't quite able to pivot, right? I was really, I was really long focused down here at time at the bottom to a T, and then I wasn't able to really let this make my year like it should have. This rally, I wasn't really able to pivot long. Like when we put in this higher low, I wasn't able to really get the commons position and exposure and pivot long. Instead, I was just shorting here to here and then trying to short the whole way up and just catching a couple wins here and there, but not really fully capitalizing on that exposure and the potential. Like a lot of names, like an AMD right here, was really, really clean into that May higher low. I wasn't able to quite pivot and buy a position on commons and let that really work itself out, right? So there's that, right? And then we put in this kind of soft, cold CPI top. We saw the VIX pop on the 13th, on the 12th, and then the subsequent war news, fill the gap, break down, see this accumulative structure into the OPEX. We don't see rally off of OPEX. And then we get the continuation into this all-time high rally, right? And as we, continue to rally and see this lack of, it's more or less preliminary signs of a distributive range being built out in May and in June. The all-time high push was kind of inevitable. I will say that. But now the structure that we've developed where we see this rally, we see this kind of top put in on third, low volume, holiday week, short session, that's not going to be our top, right? You can understand that the relevance behind when that happens and why that's not going to be our top for the broader equity market on the day before July 4th, half day session, low volume, right? It's an auction, and we didn't, we didn't have such a liquid session to where those hands can really change, like that top can really be put in. But then we developed this range, right, where we stall the highs, we put in a nice inwog, or not nice inwog, a nice gap down that Friday session, a low volume bid on the Monday of that week in the CPI where we gap up, get an aggressive failure, get like I think this was like a 2% move, 1.5% move from the highs, right? But then we put in this notable wick, right? And this is what I mean about short term perspective in comparison to these internal moves, right? This is a great short right here, down to taking out these lows, filling these gaps. But when we see such notable volume, right, the highest hourly volume since the reversion trade on the 9th, and we're taking out all these lows in terms of like session lows that are very liquid and have a lot of relevance and importance behind them. You can't continue to short that on shorter dated expiration, right? My whole thing is building out 2026 quarter one positioning, targeting 600, 580, 564 within, early 2026 maybe, but leaving room to add, right? Because, although we see a notable seller here, we see that internal higher low put in. Continue to rally into last week, right, where we see this exhaustive bar put in. And we see a very, very nice breakdown. Can't really crack through that 626 range. We continue to rally and continue to see exhaustion. And what I mean by exhaustion is just the lack of the effort versus result not really matching, right? The lack of harmony between the volume, the effort put in for buyers, and the result they're seeing as far as, candle spreads and subsequent structure, right? We're not seeing, higher highs, higher lows. We're seeing exhaustive rallies on low volume, on not really an aggressive bid, and then, a notable seller seeing a leg. another buyer internally, another buyer internally. We continue to rally, and it's very exhaustive and very gross, right? And so I think we're continuing to build out a range. I think that we're going to top out. It's not, it's a process to develop these things, and it takes a little bit, right? It's not such a process like the bottoming is, where that's really an event, right? You can see in April, this is a large event, and you can just kind of buy and wait, and it happened in less than a month. April 4th to April 21st, you can just continue to buy stocks and rally. You can make that money. This is one where you have to be a little bit more selective, right? The top is going to take a little bit to put in, and especially the time frame that this happened on within the summer, the window of low liquidity and low volume, where we have that VIX compression. This is going to take some time, right? So my thought process for an options positioning is still that quarter one expiration, leaving room to add. I do think that we revisit 600, 589, and 564 this year. Ideally, that's only a 10% decline. And we're really not seeing, like, a lot of people I feel like are very, very aggressively bullish up here. I mean, we're only, 3%, 4% above 2025 quarter one highs, 6%, 7% above May highs, and 5.5% above the June highs, right? And this is coming off of a 33% rally. We're not, like, this is not super structurally sound, and there's a lot of conviction behind a lot of other names, a lot of rotations happening under the hood that I feel like a lot of people don't understand, right? You're seeing a lot of the leaders and the big risk on tech names like Nvidia, AMD, financials, all Mag 7 names really, um, you know, finishing out these reversion trades, and you're seeing a lot of names that have been underperforming, consumers, for example, healthcare, kind of see notable buying at these lows and passiveness behind that bid begin to show itself a little bit more, right? And I'll talk about that in a minute, but it's a lot of just understanding, okay, we have profit taking at the highs and stagnant, continuation on a lot of these risk on names. And we're now, we're kind of starting to see, we have seen legs from these sellers, right? We have seen legs. It's just the dip is continuing to get bought. And when we're seeing these risk off names, see that money rotated into them, it's a big red flag. And it is kind of part of that dispersion where we have indexes pinned and a lot of constituents moving away from each other. But now I feel like the names that we're moving away from each other are now going to flip, right? The names that are kind of outperforming and performing really well and are very, very liquid and risk on are seeing, the tape flip and vice versa for a lot of the underperformers, which I'll discuss as well. Um, this is not appealing. I don't know why you would be long up here. There was, you know, great long opportunity throughout April, a re-roll opportunity in May, and after that, it doesn't even really look appealing to me in June at all. Minus, the positioning that you can take off of 623 or on 623 off of 593 gap fill. But this rally is just super unappealing to me. And I think that time will tell. I have a much broader perspective on this. That's why I said 2026 expiration. And then as far as like a commons position, I would like NVDS or XPSX. But there's been very, very minimal opportunity that I'm super, super appealed by overall. Um, as far as shorter term trades go, this has been a sequence where you don't need to sit on the charts all day. Like, there's not many intraday opportunities that I like. I don't even like, we saw a really nice fade yesterday. I don't even really want to trade that. I'm finding that the edge is much more appealing on a broader contextual range per se. Um, and when we develop, like, if we crack 626, put in a lower high, that's a beautiful trade on a month out to the 615 range, right? And same thing off of 613 to 600. So those internal opportunities will develop soon. It hasn't shown anything that I'm super, super appealed by yet, and it's continuing to be a position and a thesis and conviction that is not necessarily ready to get super aggressive on yet, but it's showing really, really big red flags across the board. You look at the daily structure on QQQ as well, right? We're only a few percentage points above um, the 2025 February highs, 10% above the May highs, and this is in a 42% rally, right? Um, the edge just isn't there anymore, and it hasn't been for a while. There's been a couple of opportunities that I do like on commons positions on shorter or smaller exposure up here, like Google, Energy, Pep, but this is just unappealing. And I don't know how you can sit here and kind of have conviction long side when this is how we look. But you also have to understand that the conviction short side is on a much higher time frame basis, and there's not really much of an edge there quite yet for that short positioning internally as well, right? So, we have XLF failing, fading the previous highs again. We're seeing some nice volume pouring in. No real edge quite yet, right? This is a name that I do think revisits, 49 to 47 within the year, which is like a 10 to 15% decline, 10 to 11% decline. But this is a name similar to quarter one. It takes a little bit for these to develop, right? We have to have a cause built out. We have to have those hands change, have to have that demand wiped and those highs sold off, right? And that cause built out for the subsequent effect, like we did in March and then in May or in April. So this is a really high conviction thing that I'm seeing in the financial sector as well. Is this distributive top being put in, I guess you could say, but there's no conviction quite yet, right? If we, put in a lower high, that's a clean trade. But I haven't seen, subsequent structure develop that really gives you that conviction as far as taking a position short side on banks yet. XLP, a very, very big red flag for the risk on equity um, as a whole, right? We see an underperforming sector, lower beta sector overall that doesn't have as much liquidity or volume backing it. A very illiquid options chain, I will say so myself. Not an options chain that I really have much of an interest in trading, as long as the individual names as well being very illiquid. But we're seeing the rally in April and then the subsequent consolidation, right? You look at this and you look at XLK rallying, putting in this kind of topping process with this notable buying exhaustion, but not quite such a edge yet. Like I said, we're reclaiming, we're developing that internal higher low here and here and whatnot. Very weak bid into this really ugly Tuesday candle. XOP is stagnant, right? We're up like 6% from the April lows, 7% from the April lows, and we're seeing a buyer throughout here, right? We're seeing the undercutting of these lows, the rally in June or in May, right? And keep in mind what was happening in tech equity during this May sequence, right? Where we see that kind of initial 3% decline from the May 19th high to the May 23rd low. And we're seeing, a lack of aggressiveness behind the seller within this range, right? Very, very healthy volume patterns, very nice pops. Yes, we lose the lows, but we see kind of the manipulation happening underneath those lows, and that buyer showing his hand again. We see a really clean pop last Tuesday. Take a look at what XLK was doing on the 22nd, right? Down 1%. So the conviction behind my thought process, my thesis, is definitely aligned with how the money rotates, right? Like this is a big red flag. You see a really clean and appealing structure developing on XLP. You see a lot of individual names that are underperforming relative to where they're at in comparison to April lows, and it's just a lot of conviction, right? Because I've seen this before. It's all about recognizing what you've seen before and understanding how that matches what you see now, right? And I've seen the rotations happen before. I've seen the risk off names get rotated into, and we see the tech names collapse and fade, and it's just added conviction, right? When we see things like this, energy, I don't really like this higher low on energy. This can revert a little bit higher, but it's not such a clean favorite of mine at the current moment in time. I just don't. I mean, this could develop a path of least resistance through 90 to 94. I just don't like the aggressiveness behind the candle on the 18th, right, where we have a good amount of volume put in at the high of day, and just a very notable lack of like healthy price action developing. And there were good opportunities in late May and late June, but nothing that I'm super confident in quite yet. On energy, SMH, another really ugly candle, but we've yet to crack under 283. Right, the July high is a pretty pivotal spot where we're seeing one, two, three, four daily attempts to mark this up, met with stalled progress, aggressive leg, very weak bid, notable seller at the highs. No edge yet, but a very distributive range being built out after a 75% rally. Once we crack under this 283 range, right, it's kind of free falling to 260 in my opinion. So if that path of least resistance is potentially being developed, that's a clean focus, and a lot of these semiconductor names like AMD and Nvidia are really rallying extensively and have seen the preliminary signs of like a parabolic top being put in. General ARKK, this is very extended, very notable exhaustion and aggressive seller last Monday, and we did see a nice leg yesterday's session put in. Just an extensive rally of over 100%. I'm not saying that this is really going to revisit the new lows. This is a sector that could trade a little bit higher and outperform, but you have a very notable gap up and failure in last week's weekly candle, backed by a good amount of volume in comparison to a 7% week. So there's a big red flag in ARKK, and a lot of these names are kind of topping out as well. Mags, the draw might be the new highs here, and that's a tape that I'm going to be pretty focused on as well, to kind of watch and see how Mag 7 names that are, in my opinion, all topping out, minus maybe potentially Tesla, kind of act at these new highs. Other than that, XLV, this is an underperforming sector, not only percentage-wise, but relative to where we're at within the chart. You see how we have yet to fill the April 3rd gap, or April 4th gap. We didn't really have an unfilled gap from April 3rd. But there's not quite an edge here. The only focus of mine in this sector would be a UNH Commons position on a higher time frame perspective. Still 100% a reversion candidate. It's just like when we see this develop, we see this bottom put in, we see the nice, really clean 30% rally off of this low, and then we see, a 6% gap down, the attempts at a higher low met with very minimal follow through and a lack of a clean structure. And we're trading within this range for, a month and a half, and seeing no attempts to really mark this up, minus this failed breakout where the gains are given up immediately the following session. Kind of signaling that this low is going to be taken out. I want to see how this buyer behaves within this COVID gap here and underneath these lows at 250. And that would be a Commons position I began to focus on. Couple that with NVDS and maybe an SQQQ position into 2026 could be a pretty aggressively performing portfolio if you position correctly. Nvidia, I mean, this is ugly, right? We're seeing the exhaustive gap. We see the continued exhaustion. We see the 3% move. We see the continued rally with very weak volume backing it. Unusual pop on Monday, but then a gap up that's failed on Tuesday session, right? And aggressively as well. We see a really aggressive tape flip during yesterday's session, and just a very ugly weekly or hourly chart, right? We obviously have the rally and now the range being built out, and that's not a good sign, right? When we see this range kind of being developed, right, where we have the highs being sold and the legs kind of starting to develop within these gaps as well, exhausting some of that demand. That's not a real good sign. No edge yet on the shorter expiration positioning. Something could definitely develop soon. My main focus, like I said, is an NVDS position. I honestly don't mind taking those starters at 140. You would be down about 40% from your initial entry. That's why I kind of really prefaced, like, this takes time. You look at AMD. This was a daily distribution, and this UTAD took way longer than I even expected it to. So these things take a lot of time, and you have to leave room to add into your position and understand the context and the perspective as far as time frame goes on this exposure being to the low $100, relatively, in a few quarters maybe. But I think this is going to extensively sell off this year. I think we're going to revisit 130s, 120s this year. I think we're going to visit sub $100 early 2026. And this is a position that I would not be upset having exposure to. One thing that I like to preface is, as well as understand the time horizon of your trade. Like I said, you want to have multiple portfolios, in my opinion, shorter term positioning, longer term positioning, retirement, investing, whatever your edge is. In the shorter term positioning, I like SPY January, March puts, right? In the longer term positioning, I like NVDS. And I like this with room to add into the new highs, still having room to add, and really letting this develop for a potential position that can take us to the low $100 before you can cover and re-roll, and then take the shorter term positioning along the way, right? And then I like UNH. That's really it for me right now as far as exposure goes. Not much else besides maybe some commons in the shorter term positioning. Port on like PEP and Ford and First Soul, like a few names, right? So I think NVIDIA is topping out. I don't like this Tesla chart so much, right? We obviously had the failed breakout, and we had the 2 subsequent gap downs on like 6% sessions that really just don't develop the cleanest daily candle structure, right? And that's a very notable thing to me. Yes, this is 2 lows soaked. Yes, we see a pretty clean leg after. No, it's not the most appealing leg leading into the report where we see an 8% gap down and the continuation back into that peg. But it's really just not the most appealing chart to me as far as structure goes. This was a very good look, a very good 30% reversal from 280s to 330s, 350s. But I don't really like how this is developing, right? Yes, there's a couple of lows bid as well as the high low potentially being put in off the report. But I don't have much of an edge here on commons or on options. If we see a nice little like bull flag put in off of the 332 range, maybe like you can long this to 358. I just don't really like it. At the moment in time, I'm not a big fan of this chart. If there is an outperformer, as far as Mag 7 names though, this would be one that I would not be upset having exposure to. This is one that I do think we can see 400 on this, but it would probably be just an outperformer in general, right? In my opinion. AMD, I think the top's kind of being put in on AMD, right? This is another name like NVIDIA that rallied extensively. This, however, similar to like the MUs and the Lam researchers, preliminary development of climaxes was already seen throughout this name, especially because we had the distribution in quarter 1 of 2024. We had the lower high in quarter 2. Or quarter 3, I guess. We had the lower high in the quarter 4, following April or August 5th lows. And then we had the gap down at the report, and the, climax is developing underneath the August 5th lows, but lack of a really, really structurally sound follow through at the moment throughout this range, right? We saw 1, 2, 3, 4, 5 lows bid with notable volumes off of like a report, off of like this massive sell-off, but no clean structure or legs developed, and leaving these gaps unfilled until April, right? In April, we didn't even have a scary amount of volume. I don't know, scary. A notable amount of volume down here. I mean, we had a lot on the April 9th print, but nothing that was insanely historic, especially in comparison to the distribution we developed in quarter 1 of 2024. But it's all about the campaign that was being developed beforehand, the hands that were changing, the path of least resistance being developed. And there's a reason why this name outperformed, right? And there's a reason why this one was a super clean long, and why we had this pop, we had this 2 weeks of consolidation inside the May 12th gap, and we continue higher, right? But now we're getting extensive. We're getting parabolic. We're pulling into gaps that are left unfilled from, a year ago. Earnings reports, earnings gaps. We're seeing, very, very climatic volume patterns here, even here as well. You had a nice high low in the progression gap reclaim, yes, but this kind of influx of, the volume getting really wide, the spreads getting wider, and then this kind of inverse hammer candle, I guess you could say, being put in is a very, very big red flag, and just understanding the, aggressiveness of how these hands change. We have a report next Tuesday after hours. This is a name that I would watch for a flush, especially if we can trade within this range or maybe pop up to 190. But not a good look, right? And there was a couple of opportunities. This was a clean one off a progression gap being reclaimed from last December. But after that, this just really doesn't look the cleanest in my opinion, and the risk to reward alongside diminishes aggressively. Apple still waiting on the report Thursday, tomorrow after hours. I would love 5 to 6% gap up. The implied volatility is probably pricing in. They're probably pricing in like a 10-15% move on Apple. So I'd like to see this open, maybe green 5% up to 225, and then see a flush trade develop and a top put in for this Apple chart within a very pivotal range. Microsoft and Meta report after hours. Two names that I don't have an edge on, but I think are developing tops. I've discussed this a lot. This is going to revert to the mean, and it's probably going to happen pretty aggressively, just like it did May 1st into that January 30th gap. Google saw the reversion into this January or February peg, but I don't have an edge on this anymore. There's a clean commons trade here, 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 here. Now we've kind of completed this reversion almost. We have a couple percentage. We have like 5% potential left over in this name, but not the cleanest looking alongside trade as we trade into this bear gap. And then Amazon as well has a report tomorrow after hours, sitting beneath this February earnings gap fill as well. So that's kind of my perspective on a lot of names, right? And my ideal positioning right now in terms of the shorter term leveraged options exposure, and then the higher time frame commons positioning that I really, really think is vulnerable for the short-sided trade going into 2026, right? As far as other names go, like I said, the PEP chart was really, really good off of 128 with these climaxes built out, this historic volume being put in underneath the 2021 lows. That's a very notable sign. Especially, I can't preface this enough, on an underperforming name. Sitting underneath the April lows, we see the capitulation off the report. We see the subsequent, lack of aggressive follow through from these sellers. And the buying happened down here very notably and very passively. We see, influx of volume, nice leg, another low soaked, another one into this January or June 26th kind of pop on volume. See a really clean rally into the low upper 130s with a subsequent consolidation after, and the 7.5% gap up off the report, right? So there's a very clean commons position down here, and then you can cover some into the report and then cover all of it. And now what I'd be looking for is a profit roll on options, right? Because there's not much of a target I can really, really confidently say as far as shares go, besides maybe like 155 to 160. I would more or less be focused on longing this back up to like that 140 to 147 range. And then waiting here, right? We see the undercut of the earnings candle open, right? The 3% day last Tuesday. As I said, you go look at NVIDIA last Tuesday, minus 2.5%. You look at Pepsi, plus 3%. That's a big, big, big time notable thing that a lot of people don't understand. We actually could develop something within this INWOG progression reclaim, but I would rather personally wait for, we have this kind of external weekly high from the report. My focus here would just be either sweep further into this gap and then see a pop up to like 150, or get a nice higher low off 146, signaling that kind of character change and that path of least resistance, right? Because we had the failure here, we traded lower on very lackluster selling effort, right? We had a lot of volume put in on Monday's session, and we see that buyer showing his hand at 142, but this is a little speculative for an options trade, just because of the fact that we could crack into this gap and see, this is a 7.5% gap on a low beta name like PEP. We could see a little bit of slippage underneath 142, so I'd really be a little bit more patient with waiting on this name, personally. PAW is a name that I do think is developing a higher time frame distribution, and is one of those names that really adds into my conviction on a broader equity market top, right? This is, a name that has rallied extensively, not only off COVID lows from $22 to 200, which is insane in 5 years. That's 1,000% return in 5 years, basically. And, from 67 to 200 from 2022 lows. This is a name that made a very aggressive move, and I think we have seen, not even just we are seeing, but we have already seen the preliminary signs of an aggressive seller up here. We had this very, very aggressive gap down in February of 2024, backed by a ton of volume, backed by the highest volume we've seen on this name since 2017, where there's a very similar kind of week. We see the reversion to the mean, right? And we actually see this establish a new all-time high, where we begin to see that kind of distributive range build out. We see a climax being put in, a very notable leg happening after the split, right? Another stall at the new highs, another aggressive sell-off. The failure to take out the August 5th lows is a very notable thing to me as well, because there's a lot of liquidity underneath these lows that has not been touched, and there's a very high potential that that's the draw. And then we see the rally to new highs again, where, now, if we go to the daily chart, we've seen a 15% reversion in the past 12 hours, or 24 hours. I mean, and this is a very weak, notable progression. There's no edge here yet. There's no edge. But when you're putting in failed breakouts like this, notable legs like this, weak rallies into this kind of, I mean, this is fucking disgusting. And now we're down 6% in pre-market as well. The 13% decline since yesterday in 24 hours, in less than 24 hours. So that's notable. There's no edge here yet, right? You can't touch this. But I think that the more I look at it, I think this revisits $100 next year. And this is going to develop a really, really clean trade. If we, break down, undercut like 180, rally back up to 190, which is those February highs from 2024. This right here could offer you, a 15%, 20% decline on some options, right? Which would be insane. This is a very notable red flag, and it just aligns with a lot of the thesis behind a lot of risk-on names that have made extensive rallies. I mean, look at Nvidia. I mean, come on, dude. This is going to revert, and if I dare say so myself, we may see an equity market that just does not match the returns and performance we've seen in the last 5 years. But I don't have an edge on that. Ford, I don't really like Ford too much anymore. This made a really clean reversal, with a really clean couple of opportunities to buy as the draw is towards this $12 gap. But there's not much of an edge anymore, and we see a very weak bid into this bear gap. Nike's not ready yet. This is a 4% candle, yes, but I don't really like the structure on this developing. I mean, this was a decent little weekly kind of inside bar, pop, nice influx of volume, but there's not really a structure that I'm super, super confident in on either comms or options. Schwab, a lot of financials are really not looking that clean. Schwab and JPM with notable sellers at the highs on yesterday's session. TSM, Hood, and Palantir are all developing these tops that you just can't execute, right? There's climaxes and exhaustion and influx of volume and hands changing, but there's no edge yet. There's names that I'm focusing on and waiting on that lower high to develop on not only a daily, but a weekly, but an hourly scale, to really, really potentially execute. Short side, First Solar. This had a couple clean commons opportunities, and I still think this can push 200, but this is such a speculative sector that I don't even know how confident I am on having a position on this, right? So it's a speculative sector that can move against you like that, right? So not really super notably um, confident in this, but there is still a potential that this pushes 200. We have a report Thursday after hours, but clean buy. You got to trim some exposure though in the in long, and same here in June into this in long. And then we defend the gap as well. It's just a speculative name that developed a good structure, and it's not a common position that I'm super mad about having. But you have to execute accordingly. Uber, another distribution I think has been developing for a while. A lot of a large rotation has been happening outside of this might pop off open. This might be a flush candidate. A large rotation, in my opinion, has been happening out of risk on equity since last quarter one. But what do I know? You know, Rivian doesn't really have much of an edge yet. This really got slammed. MSTR looks really disgusting within this parabolic short, and CVX is a potential IV flush candidate. This is the only energy name I'd really touch alongside, let alone on options exposure, just because of the potential. When we have such a notable consolidation underneath this April 4th gap, we can very likely see, similar to MO, we're in a pretty pivotal point within this chart, seeing a lot of consolidation. And if everything goes to plan, this could see the report catalyze a move after this implied move is not met. That is very lucrative on an options exposure. When we gap up and we kind of see that influx of liquidity off of that earnings report generating it, could rally this a few points. And same kind of thought process with CVX, but I don't really. It's just it's just a side focus. And then Kraft Heinz is another name that I really want to discuss. Right, this is another name that underperformer, not only since COVID, or not only in April, but since COVID, since 2022, just in general, right? A very beat down name, and seeing a lot of volume being put in down here, right? Seeing a lot of volume, and it's happening pretty notably underneath these lows, right? And within this COVID range, right, we have some gaps that are being filled, being drawn into. And it's just the same thing as PEP, right? We have the April 9th lows, we have the reversion, we have the breakdown underneath those lows, this massive capitulation on the 21st, right? And the notable continued exhaustion following that, and the climax being built out here, and even here in June OPEX, we have a lot of volume. Here on the 27th, we have a lot of volume. And then we have this really clean pop and subsequent consolidation on a pretty nice move on Kraft Heinz. Um, you know, very consolidated into this July 11th news reaction, right, where we see a really aggressive pop intraday, and then we see the pop, continuation, 2 days inside bar action, continuation, 2 day higher low, 5% candle, subsequent consolidation into this report that we're now seeing potentially give us another flush candidate, right? That's a notable potential thing that's developing here. Not anything that I'm super confident in. Like I said, I mean, I don't have much of an edge here on Kraft Heinz. I'm not buying commons on Kraft Heinz down here. Looking for a 8% move. That's just not something I'm super interested in. But a very notable red flag as well. I mean, I remember back here I longed Kraft Heinz in July or in mid August. I mean, this was performing very well in July into August, right? Where we had, see, there's the big pop on, and the tape's getting smacked a little bit. It's a pretty nice pop on Mo and on Kraft Heinz as well. But this is just another risk-off name that, is seeing that rotation and is now seeing that outperformance in comparison to, recently, right? We're seeing a pretty nice 13% move in the past month on Kraft Heinz. Just a very big red flag in my opinion. Like I said, for a lot of risk-on names, um, it's just notable little things that you continue to understand what the meaning behind them is. is how you become better at trading, how you become better at investing, how you become better at positioning yourself to make money off of your money. Things that you recognize that happen that add to your conviction, right? And this, developing a structure like this is one of them. MO is popping really nice. So this can push 61 to 62. We just saw a lot of selling potentially be absorbed at 61. Volume backing this. Is this anything I'd touch? No, I'm not really longing this. I don't really care too much to long this. This isn't really such a clean risk to reward for me. And I'm not really a big fan of longing options on Kraft Heinz, especially on this little, 2 to 3 days of consolidation. If another structure develops, it would be pretty clean, right? If we can see a nice pop and a cleaner high or low. If it was something like this, but not into an earnings report, that'd be a focus of mine. But we just saw a big time. Let's actually put this here. We saw a big time order come through on MO, right? So we saw 50,000 shares traded above the ask, and 17,900 shares traded at the bid or at the ask. I'm retarded. This is at the ask. This is below the bid, right? So an aggressive seller and then a notable buyer at this range. So we could just have seen an aggressive seller get wiped and a notable buyer kind of absorb some of that demand or supply and push us towards the 61 range, right? Which is, I think, is exactly what we're seeing, right? Seeing another order come through at the bid for 16,400 lots shares. Some notable things happening in the table on MO that give you a lot of conviction for this, rally. I know the implied move was definitely not met, but yeah, I mean, this is a notable chart as well. Would I touch this? Like I said, absolutely not. I don't really have much of an edge on this name, and I don't really have much conviction to really get aggressively long Kraft Heinz. But definitely a big red flag and something that I'm going to continue to keep my eye on as far as like I said, these risk-off names having money rotated into them. Yeah, now we're approaching the 61.30 bear gap on MO. This is a really clean position, actually. I wonder what these options ran. But yeah, that's just my my continued conviction behind a short-sided trade on the equity market. Being vulnerable, that's my notable red flags across the board. I don't even need to trade Kraft Heinz to know that Kraft Heinz seeing volume like this and structure like this and legs like this are very, very big red flags for NVIDIA and for SPY and for QQQ. I don't even, like I said, I don't even need to trade stuff like that to understand the relevance behind it, right? When you have XLP looking super clean and you have XLK looking super nasty, I just don't even have to I don't even have to trade these, right? Like I said, these options on a lot of XLP names are very illiquid and they're very low beta names. They're very low, slow movers. They don't move. A 3% day on MO, a 3% day on Kraft Heinz, in comparison to a 3% day on NVIDIA, or a 3% day on Hershey's in comparison to a 3% day on NVIDIA is just, it's not the same, right? I mean, it's the same, but it's just not. So that's why I would rather personally short NVIDIA and SPY than aggressively load the boat on XLP 2026 options. It's just not the same return that I'm looking for. That's why I don't need to buy Kraft Heinz Commons. I can just buy short exposure on SPY because I don't really want it to speculate on a 5 to 6% move on Kraft Heinz when I can just have the added conviction behind my short thesis. So yeah, I mean, that's pretty much for me it, right? That's my ideal positioning on both longer term shares portfolio being NVDS and UNH soon, and that's my ideal positioning short side or shorter term being SPY 2026 quarter one puts, looking for sub 600, 580 to 560s. That's the focuses I'm looking for now, right? PEP. Oh wow, this failed extensively on Starbucks, right? PEP. These names offer good short opportunities soon as far as the Palantirs, Hoods, NVIDIAs, and TSMs, but there's no edge yet, right? So just continuing to wait and be patient and understand how these things develop, right? Collect information, continue to learn and understand like these things take time, and we saw extensive volatility and aggressive returns from April into July. And now those returns are starting to dwindle away, right? There's times when the commons port, the just buy and hold port outperforms. That was this sequence these past 3 months. Um, Not going to say anything otherwise, right? It's definitely the case. And then the options portfolio underperforms, right? And that's definitely the case because there's not been much of an edge here. Nice higher low, nice higher low, nice short. And I'm thinking about post May, minus April. This was speculative on the on the 30th into those reports. Um, there's not such an edge here that is really, really clean to me. And shorter expiration, I think, gets more lucrative soon, while we also see longer term long positioning underperform soon. So it's just there's times when the options port outperforms, and there's other times when the shares port outperforms. That's why I like to understand the time frame and the vehicles that I'm taking these trades based off of. Right. So FOMC today, like I said, really have been no opportunities that I like as far as shorter term trades this week. Monday and Tuesday so far. Following the Fed meeting, we might have something. Um, we definitely could push, 630, sub 630 this week if the Fed meeting kind of sparks something. But got to be a little bit more patient with the binary event like that, right? There's a lot of um, there's a large implied move that comes with an event like that, and so being a little bit patient is a smart move here, and waiting until after. We're waiting until tomorrow, right? Because we also have Meta and Microsoft reports after hours today, Amazon and Apple tomorrow after hours, and that Apple report could definitely open up a trade if we open up around 225. So pretty much it. Um, Continuing to watch the rotations, and my thesis that I discussed, even starting in June, has not changed at all. We're 5% above 2025 quarter one highs, right? There's not a lot of conviction behind being long up here, and there was a phenomenal opportunity to buy it, and I timed the bottom, and I just wasn't able to pivot. So, good luck, have fun. If you're gonna long, be careful, things like that.